Hi, Ryan Grubbs here with the Grubbs team from Mid-America Mortgage, here today with our midweek market update report. So last week we talked a lot in regards to how the 10-year bond and the Fed funding rate is something that our consumers can closely monitor to kind of see what's going on with mortgage rates. Today I'm going to show you the graph in regards to what's been going on with the mortgage-backed securities. This is the actual bond that dictates what's happening with mortgage rates. So as we can see here, looking at our chart, we can see this goes back to May of 2017 all the way till this month. As you can see, green means good for mortgage rates, showing mortgage rates are going down. Red means bad, causing interest rates to go up. As you can see, the overall trend is here, we're getting a lot more red than we are green. So as you can see, this chart is just a slow downhill. That means that we're losing the yield on the mortgage-backed securities. When the yield goes down on the mortgage-backed securities, interest rates go up to offset that. Now on this chart, I went ahead and I circled this little section here and highlighted it. This is a couple weeks ago when we saw mortgage rates jump a quarter. To outline this so you can see the movement that it occurred in the market for us to see a 0.25% jump in mortgage rates. So that right there was what caused our mortgage rates to jump a couple weeks ago, was that movement in the mortgage-backed securities market. Going on to some information that we got out just this week. So Atlanta Fed president came out and he's actually in support of our December rate hike. What's key to know here is that most of the voting members right now on the Fed are all in support of the December rate hike. But right now, that December rate hike has not been priced into our mortgage-backed securities market. The reason is a lot of the traders are in hopes that with all the tariffs and everything going on right now in our economy and markets, that the Fed might possibly hold off and not do that December hike. So if that December hike does occur, as a lot of the voting members are kind of pushing it to happen, it's going to cause our mortgage rates to take another spike once that comes out into the market. So last week we talked about how mortgage applications hit a 17-year low number. Well, this past week they're up 4.9% off from the previous low. Now that was only led by purchase applications being up by 2% and refinance applications up by 10%. So that's telling us that a lot of people are kind of deciding in the market right now, rates aren't going to come back down. They are continuing to move up and they're helping get people off the fence just a little bit. We got existing home sale numbers out last week, which is down 6 months now in a row. And we also got new home sale numbers out this week. New home sale numbers only hit 553,000. That's a very dismal number because again, that's an annualized number, not a monthly number, that's been annualized. So we really need to see that get back up to 1 million before we really see that having much of an impact. We also got medium home prices out. Medium home prices are up right now due to the tariffs, the cost to build. You know, builders are building more expensive homes right now. They're not building the little small cookie cutter homes like we saw in 06 and 07. So this is causing the price of new homes to go up. So as a quick wrap up, looking at the chart that we looked at earlier, we're seeing that mortgage rates are continuing to climb up. We also can see that based on existing and new home sale numbers being down, that's why we're seeing increased inventory right now out in the market. So that's helping us kind of understand what's going on with our current market as we stand right now. This is Ryan Grubbs with your midweek market update here with Mid-America Mortgage. Thanks for tuning in. Make sure to go on and like our Facebook and YouTube channels, and we look forward to seeing you next week.